Welcome, new YouTube video where we're going to discuss smart money traps. And it's an unpopular opinion, but smart money concepts won't be that profitable anymore in 2025 and years to come. Alright, subscribe for more of this content, hit the like button and ask your questions in the comment section so I can go over them and help you all to become more profitable. Alright, let's dive into the chart. And what we can see and what we have to understand is the base level of what smart money concepts is. So smart money concepts is mainly trading with market structure, make sure that all time frames are aligned, and in this example that means bullish market structure. So we could say, for example, we have the 4 hour stepping up, so we have a 4 hour range, price steps down on the hourly and comes into a POI or an order block, breaks bullish on the hourly, so the 4 hour and the hour structure are aligned. Now price comes back, comes into another order block, does a 15-minute bullish break of structure. We can put our limit in the last POI and price will rocket off, continuing with its bullish market structure. Well, this stuff worked pretty good, and loads of people, loads of traders were trading it. But we have to understand that when many people are trading it, it can become liquidity. Banks, hedge funds, market makers, they know that loads of people are trading smart money concepts and so on. They try and they make traps in the market, so they want people to enter, then take them out because they have to collect liquidity. They already did it on support and resistance, trend line, Fibonacci, all kinds of liquidity pools, but they definitely added smart money concepts. And stay till the end of the video because I'm going to show you live examples where we can see the traps playing out around certain timings, because those traps mainly occur pre-London, pre-New York, right? Because everyone trades those sessions. So can you still be profitable with smart money concepts? 100%, but you have to understand when something is a trap and something is just market structure stepping up. So the difference should be very known. You should understand what is happening and you should be able to read the chart and understand when you are becoming part of the liquidity or when you are at the right entry, all the liquidity has been taken out and now you can enter on the break of structure, change of character, fair value gap, whatever you do, it all comes down to the same thing. So we have that example here live on the chart. And this was something that worked pretty well during 2022, 2023. But later on we saw way more traps building up, right? And I have an example here, for example. So in this case we have bearish market structure steps down, we create equal highs above an order block. And what we very often see is that price steps in, give that bearish break of structure. So that's a confirmation, a confluence for smart money traders to look for a short position. What they do, for example, now they have marked it out, they wait for the 1 minute to step up, the 1 minute bearish break of structure, limit in the last POI, and they expect price to melt. But what we very often see, and especially around certain timings, so for example, this is pre-London, London opens with this bearish break of structure, we pushes all the way through, we take out that whole area, and then we have the initial bearish move. Right, another example is where we have, this is not working that well, now it's working better. So another example is when we have bullish market structure stepping up, we get that bullish break of structure on the 15 minutes, well, the 1 minute stepping down, waiting for that 1 minute break of structure, price takes that liquidity, takes out that low, and now it's turning bearish, right? So you have to understand market structure because that's the base of all. So we can say that we have a low in the market, a high, a higher low, a higher high, in this case a higher low and a higher high. But very often what we see is that price creates a lower low, breaking bearish market structure in this case. And now what most people think is in the last POI of the hourly range, price will come into, for example like this, doing a 50-minute bearish break of structure, watching the 1 minute step up into the last POI, bearish break of structure. Now they can enter on this last POI, but price takes them all out, right? And to get it a little bit more clean, this is how it should look like. This is how you should mark it out. But the case is that this is mainly a big trap where the market makers, hedge funds, banks create it because they need liquidity. They need the fuel for the market, right? There, for example, there are 100,000 people trading smart money concepts. There are 100,000 people trading support and resistance. And let's assume that all those traders are retail traders. That's not loads of money, but it's enough money for them to collect because big banks, they need to fill in their orders. And for that reason, there has to be liquidity, right? They cannot fill their orders. They cannot enter with $1 trillion, for example, if there's not $1 trillion in assets to buy. So they have to liquidate those orders in order to fill their own orders. That's how liquidity works. That's the base of liquidity. So understanding that, and that nowadays they're creating those traps, we have to be very aware when those traps occur, and those traps occur mainly around a London Open or a New York Open pre. So let's say the first half hour, the hour before the session starts, we can see those confirmations lining up. Everyone thinks that, for example, this push into the last POI is New York Open. They give that false bearish reaction and then takes everyone out. So how can we read price action and how can we read price to make sure we're not part of the liquidity, but we know when to wait before the entry, before the liquidity has been taken out? Because I have a saying, if you don't see the liquidity, you are the liquidity, right? So we have to be very sure what happens and how can we avoid those certain events. Well, I'm currently on GBP USD, and I would suggest to jump into the chart to find examples of where we can see those traps playing out around certain timings. And I already can find the first example because we have, and this is on the hourly, so there probably will be a 50-minute POI. Let's check. Perfect, 50-minute POI over there. Price comes in and it's slowly starting to come up in very nice bullish market structure, because what do we love to see? We love to see price stepping up very clean into that POI, waiting for that bearish break of structure, that last limit of the last POI, waiting for it to tap in, do a 1 minute break of structure, entry and short. But we have to understand that price is inducing sellers over here, and we can see that price is pulling down towards the downside, and you can see the timing. This is 2 o'clock Amsterdam time. This is the New York Open, or I love to wait for a little bit longer, 30 minutes, so 2:30 Amsterdam time for me is the perfect time to look for potential entries. And what we can see very clean is that price comes in, give that illusion that price wants to go lower, and then rockets completely off. And what happens, every smart money trader that entered over there has their stop losses being hit. And you want to avoid those situations. So how can we avoid it? Well, simply because we can see that we have a pool of liquidity building towards the upside. Meaning that we clearly can see that we have a trend line build up with 1 touch, 2 touch, and a potential 3rd touch. And when we see a trend line lining up like this, well, in those cases, we want to be a little bit more aware, a little bit more patient, and not entering too soon. There is also a support area over here. So all those pools of liquidity resting above a POI means that the liquidity has not been taken yet, and you need to be extra careful whilst entering the trade. So this is one example. Let's find another one. And there are tons of examples, to be honest. Let's say current price action. Current price action, we are stepping down bearish, even on the 4 hour, right? So we have bullish market structure. Here we had that 4 hour bearish break of structure, confirming that all time frames has to be aligned. 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. That all happened in this little area where they all induced smart money traders. What happened? We push up, takes them all out. Then again, right, we have a high in the market, a low, a higher high, and a lower low. So we could say that our current range on the 4-hour is from this high to this low, and we do have a beautiful POI resting there, and we can see that price comes in, reacts, give that bearish reaction, and then pushes out all the way. So let's analyze it a little bit more on the lower time frame. So what happens? What we can see is that price comes into that POI, but already a thing where we have to be very cautious is that we create support around that POI. But most people don't see it because they only see and they only count for the break of structures. And what happens is that we get that bearish break of structure on the hour. Now let's jump into the 15 minutes because now we have a new POI over here. This is where loads of people are interested for trades. But what they don't see is that we have a trend line buildup over there as well. Let's see, 15 minute price action. Can we find anything yet? Well, no, to be honest. 5 minute, also not too clean. Let's see what the hourly POI really is. Can we make it a little bit bigger? Some people, yeah, it depends. I mainly go for the last order block, but some people do the last 3 bullish candles before the move down, and then we can clearly see that price pushed in. So let's reassign and let's see what happens, because this is the trap. This is the trap playing out. And look at the time where price give them the illusion that price wants to go lower, right? It's 230, and we pushes and take them all out. All right, so price comes in. And on the 15 minute, price become bearish and gives bearish market structure. What is it doing? It gives the illusion that price wants to trade lower. Well, that's not the case. So now we have the 4-hour bearish, we have the hour bearish, we have the 15-minute bearish. Let's see how the 5-minute is holding out. All right, so 5-minute structure is bearish as well, right? So we low, high, lower low, lower high, lower low. So it gives the illusion to people that, all right, I can see that market structure. It's starting to look very good. Now we are coming into the New York session. What do they see? They see, again, a bearish break of structure over here. Let's see how the 1 minute is looking over there. 1 minute price action, because it showed you that this is one big, massive trap. And well, we don't see a bearish break of structure over here, but we see a bearish push. And for some people, that's already enough. But for me, it wouldn't. But for some people, it is, and definitely starters. So we do have our POI. Price taps in, doing a bearish break of structure on the 15 seconds. I would say, I don't know, I personally don't trade the 15 seconds anymore, but I usually did. And you can see the reaction. You can see the wicks thrown around, bearish push, then comes into the other area, and it takes everyone out. And this is how you can be aware of where you're currently at and how price is reacting. So by watching this video, by watching these charts, by watching and understanding that smart money traps are mainly built up pre-session, pre-London, pre-New York, you can be very, you can avoid those traps and being trapped into the market, and make sure you wait till all liquidity has been taken from the market. Or even better, what I do is when I see these kind of reactions and we coming into certain sessions, I'm more interested in longs than I'm into shorts, because I know where the liquidity is. We have that major resistance area over here. We have the trend line build up. So the liquidity is resting towards the upside. So why not trade into that liquidity? Take the profits already here, close the trade, and done for the day. And it doesn't mean that I was into this trade, because I don't see any confirmations for myself yet. But in many occasions, I do see the confirmations lining up towards the other side, and that's why I want to enter on the opposite direction, targeting those smart money concept traders. So don't get me wrong, smart money concepts can be highly profitable, but you have to understand liquidity. Otherwise, you will be part of the major trap that's happening on the charts. And this is just one example. I highly suggest you going to do some backtest sessions. Search for these areas, search for points of liquidity, and see how price reacts at those points of interest where liquidity is resting above, and just let price run and see how it plays out. And you will find out that every London session, New York session, those traps are built up and ready to be taken out. Now the fuel has been created, and you can see the massive pushes towards the upside. And yes, it can be news, it can be Trump speaking, I don't know, but the matter of fact that liquidity has been taken out, and most people were part of the trap have already lost their trade. They're trying to re-enter. And if you are very aware of what price action is telling you, you can make sure that you don't be part of the trap. I do have my own Telegram channel. It's in the bio and in the description, where I share market updates, where I share trade setups, but also trade breakdowns, where I really show you my analysis. And I'm also pinpointing out these kind of liquidity areas, so you can be sure not to be entering on the wrong side and waiting for all liquidity to be taken out before entering on the right trade. All right, this was a short video, smart money traps explained. We don't have to overcomplicate it. It can be just this simple. You have to understand liquidity, and you have to understand what the major and the big corporations are doing within the markets. And if you understand their objective, now you can be making sure that you don't be part of the trap. I want to thank you for watching this video. Definitely, again, hit the subscribe button. It would help me tremendously. And I will see you on to the next one. Cheers.